Hello, my name is Scarlett Roger, and I am a realtor with Keller Williams. And today we're going to go just our first step in homeownership education. I'm going to do a 6-part process. But today's going to be basically just an informational webinar for beginners. And what's kind of brought me to, doing such a webinar is because from in the past, I spent so much time helping people obtain homeownership or doing loans. And then I did foreclosure prevention for the past 7 years. So I thought, a lot of first-time home buyers, even people that may have owned homes before, but at some point lost home ownership, that this would be a really great webinar to kind of go through that. So are you ready to be a homeowner? There's a lot that goes into home ownership. And again, like I said, if you have had a foreclosure in the past, or perhaps bankruptcy, or for some reason, sold your home and have not been a homeowner for 3 years, you're actually still what they would call a first-time home buyer. So right now I'm going to talk to you a little bit about what the myths are with rent versus buying. Because so many people out there believe that after bankruptcy, life was over, and or foreclosure. And I just kind of wanted to take a look at that. Here's a great flyer from Van Dyke Mortgage, which is one of my preferred lender, that talks about, the myth of renting versus buying. There's also another, and I am sharing my screen, I believe. There's another flyer out there that talks about, what you need after a foreclosure. So I'm going to share with you, because a lot of people don't understand. They think, okay, so I've had a foreclosure, my credit's ruined, I'm never going to be able to buy a home again. And that's absolutely not true. So here is, I'm going to share this with you, and it's the derogatory credit. So I'm going to share this with my screen. And it talks about derogatory credit, again, Van Dyke Mortgage. And so if you've had a bankruptcy, like a Chapter 7, if you notice here, you would have to wait 2 years for FHA. That's not bad. Extenuating circumstances, somewhat like a death or a divorce, something like that. If you can prove that, you only need to wait a year after bankruptcy if you want to go FHA. If you want to go VA, it's the same, 2 and 1. Conventional's a little more strict. So 4 years for just a normal. But again, if you have extenuating circumstances that you can prove, then you would only have to wait 2 years. For Chapter 13, it needs to be 1 year with 12 months paying satisfactory to the trustee. The same for FHA. VA, it's the same thing. And then on Fannie Mae, it's 2 years from discharge or 4 years from dismissal. And the waiting period with extenuating is the same. Okay, so foreclosure. So, foreclosure, when exactly does this begin? It would be from the year that the foreclosure was finalized. That means you've gone to court, not from the year they filed the foreclosure proceeding, but from the year that it was finalized. And you would need to wait 3 years with an FHA mortgage. DU would pull it for extenuating circumstances, 2 years if it was a VA, and 7 years. 3 years additional requirements after 3 years, up to 7 years. So that means with conventional, let's say you could only get up to 90% LTV or maximum eligibility, limited cash out refinance, all types. So what does that mean? Especially for those out there who have had a foreclosure. What does that mean? That means you can, at 3 years, if you have extenuating circumstances, but then you could go up an additional 3 years. You have to run it through DU. I would say personally that FHA or VA would be the first choice if you're coming out of a foreclosure, because it's just 3 years, which is amazing. You may be able to get it sooner. If you did a deed in lieu, that means that you did not go through the foreclosure process, but you did a deed in lieu where you signed the deed back over. It's still 3 years and 2 years, but with Fannie Mae, it's only 4 years. So that was a really good thing for those people. The same goes for a short sale. So regardless of LTV, which says to me, I know that they have a great conventional first-time home buyers after 3 years. So let's say that you did a short sale 3 years ago. You are now qualified to be what they call a first-time home buyer. And 4 years, you could probably get that 97% LTV. Now, I'm coming from a background where I was a mortgage loan officer at one point, but I most recently have done underwriting for lenders as well as forensic document, like fighting with the attorneys, kind of trying to prove that there was fraud and such. So I'm looking at it as an underwriting standpoint. We're going to have Geneva come in and do a webinar with us where we can ask some questions and get some answers according to how this works. But I just kind of wanted to, give a quick little show on that. So that's kind of the myth that we hear about. So let me go back. So what if I have, okay, so this is, we just kind of went through that. What are the steps to buying a home? Now, this is what I want to talk to you about, because, okay, so we just discussed first-time home buyers can be people that were in foreclosure and in bankruptcy, which means it's a great way to restart. But what about for all these people that have never bought a home before? Personally, I feel, again, I spent the last 7 years dealing with foreclosures. So I think that, it's really knowledge is power. A lot of people, especially when I first went with NACA and we were doing the home preservations, a lot of people had no idea about the documents that they signed. They had no idea about the steps that they went through. They didn't even know what kind of loan they owned. They didn't know who did the loan. They just wanted to buy the house. They were told they were approved for the house. At that point, back then, if you could make, they used to joke and say, you can make a mirror, if you could breathe in a mirror and make it fog, you can get a loan. And because of that, a lot of people were in homes that they couldn't afford. They weren't set up to win. They were, I believe a lot of people were set up to fail. So my goal with this seminar is to kind of walk you through a series of different types of, we're going to speak with a lender, we're going to speak with a home inspector, we're going to speak with an appraiser, insurance company. I've got an amazing title woman coming in, and we're going to do 30-minute little segments, question and answers. They're going to explain the process so that you know what you're doing and you feel a lot more confident when you're getting ready to buy a house. So these are the steps in buying a house. And before let's just start with the beginning. And before you begin your search in buying a home, you're going to need to speak with a qualified, honest lender. One thing that was a huge issue in the housing crisis was getting the highest amount of approval to be able to obtain the biggest and best home. Quick teaser rates, which would be like an adjustable rate mortgage. They were given a lot of quick little teaser rates to get you in, but sadly, many of these programs set the homeowners up to fail. You need to make sure that you're clear with your lender what you want and understand what you can afford. There are many myths in the forms of lending with banks versus dealing with a your hometown bank versus dealing with a mortgage broker. And I can assure you that they're all sold. I get to have that conversation a lot. I want to just go to my credit union, or I just want to go to my local bank because I don't want my loan sold. They're all sold. Okay. And I can say that with pretty confident because again, I spent the last 3 years finding the owners of these notes and mortgages and what happens. And so I know this to be true. I spent the last 4 years chasing mortgage and notes, and I have seen who's easy to work with when there is a hiccup. And you're going to want to find a loan officer who's not only an expert in their programs, but you're going to want a loan officer who makes sure you understand and that you're protected from getting in over your head from the mortgage, that you can afford for the home that you purchase. Once you meet with that lender, you'll give them your information. They're going to pre-qualify you, and then you're going to be able to know with your realtor what exactly, what price range of a home that you're in. Once you meet with a qualified real estate professional like myself, and we'll review what your needs and your wants are, we're going to be able to narrow your search. We have a great program that we can send you. We'll send you a list of homes to look at, and then you get updated every time the house comes back on the market. You're going to need, when you get ready to start looking for your home, you're going to want to take notes and make sure that you take notes on each one of your MLS forms and kind of grade them as you review them. Because sometimes when you go and you look at a couple of different houses, you kind of forget the great stuff and the stuff that, you didn't like on each house. So a lot of times I give my clients like a little book, and on the back of each of the forms with the pictures and all the information on the home, you need to take notes as you walk through. So that way you can go back when it's time to make a decision and be able to narrow it down better. Once you found the house that you're looking at, then you do what they call you make an offer to go under contract. And this is when, again, you're going to want a qualified professional agent like myself who can help negotiate with you what the best amount really is that home worth. Not just what the offering price, but what is that home worth to you right now? And then your agent is going to help negotiate the different things that you want. Do you want a certain amount of things fixed in the home? Are you okay with buying the home as is? Again, this is going to be another seminar that we're going to go through, but to understand the different contracts. But really, you're going to get ready to make your offer. And sometimes just understand that your first offer is not always what's taken. You end up going back and forth. And you're just really going to, have some patience when it comes to that. But then when they accept your offer, now that's when the fun begins. One of the first things you're going to want to do is to book a home inspection. The inspection is really huge in the buying process because you're going to want to know, you're going to want to look under the hood and find out everything that's wrong with the home so that you can make a good decision on whether or not this is the home for you. And maybe you can go back and negotiate some items for the seller to fix. Or you just may decide that this may not be the house for you and you can walk away. But the home inspection, I was part owner of a home inspection company years ago, and I know a lot of the things that you need to look for and what you need to find in a good home inspector. And you need to make sure that they're a HASHI home inspector, that you want to maybe, if you even want to see a copy of some of their sample reports, but that's going to be one of the first things that you need to book. And I usually give my clients, a list of a couple of the top inspectors. That's very, very, very important. Do not decide that you don't want to spend the $300 or $400. It is the best money spent. I will assure you of that. Okay, so then your lender is going to order what they call an appraisal. And the lender requires appraisal, but not only does that protect the lender, but you as a buyer. Because with an appraisal, you're ensured that your new home is worth what you're paying for it. And, it's part of the process of getting a loan. And during this process, you'll be working with your lender for an approval. This is going to be a very long or short process, depending You may have to, give in pay stubs. You're going to have to give bank statements. You may have to write letters of explanation. Understand that, I'm coming from an underwriting standpoint, so I get it. This can be a very long process in which your loan is underwritten according to guidelines. I'm going to do a seminar, one of the seminar, when we talk with the lender, I'm going to be actually speaking up from the underwriting side because, again, I've been a senior underwriter. I've underwritten Fannie Mae, Freddie Mac, VA, FHA, and loans are approved to what their guidelines say. It's not just this mean person on the other end of the screen. They want to give you the loan, but they just have to make sure that you fit within their criteria. But today's webinar, let's just say it's not personal. And in order for you to get the loan, there are guidelines that must be followed. And that this is for your protection as well. Trust me, because again, you want to be able to get in a home that you can afford, that is going to be able, that you're going to be able to raise your family or, whatever. This is going to be your home. So, you want to make sure that you can keep it your home. So during this time, also, you're going to need to contact an insurance company to get a quote for insurance on insurance policy. You want to make sure that you start this process. I would start this process about the same time that you order your home inspection because, you may have different, things that you're going to need to get for that. So once you've got your approval, the house has passed the inspection, the appraisals come back in, and you've got your insurance binder, we're going to get ready to go to the closing table. Closing, this is going to be a class in itself, and I've got a great title company, an amazing woman that I've worked with for years that is going to, I'm going to interview her, and we're going to discuss the closing. You should receive your HUD-1 about 24 hours before you close. A HUD-1 is basically a breakdown of all the figures that it's going to cost for you to buy this home. And you're going to need to go over that HUD-1 with your lender as well as with your realtor and make sure that the amounts are correct. And then when you get to the closing table, you're going to want to understand what these documents are that you're signing. Again, I recommend that you watch the webinar that we do on title. I'm going to, be interviewing the closing document and also as a certified bank foreclosure document examiner, I'm going to be reviewing and kind of going over in much greater detail what these documents that you are signing and what it means when you sign them. So again, I just want you to make sure that you turn in for the next couple of weeks as we bring in specialists. We've got a title company, a lender, an appraiser, an inspector, a bank certified examiner, and someone that handles the insurance. And we're going to just kind of review and interview them with what's going on in the trends so that you are fully aware of exactly what's been what's going on with your loan. And I appreciate you being here, and I hope that you continue to tune in to these webinars. I'm trying to keep them 30 minutes so that it's easy for you to watch. If you have any questions, please make sure you email me. The link will be below. And again, stay tuned next Sunday for our next webinar and send me any questions that you want to ask. Next week, we're going to be doing it on the pre-approval process. So, if you have any questions, send them to me. And I really enjoyed being here with you today. And I hope that, you kind of get an idea of what these seminars are going to be about. And I hope you have a wonderful week. Thank you. This is Scarlett Roger, your South Tampa specialist, signing out. Have a great week.